move on, let's talk about a strategy note then. We have one coming in as far as the greed and fear note is concerned from Chris Wood. If the war in Ukraine continues, central banks will have a harder time dealing with inflation. That is what Jefferies' greed and fear note says. My colleague Harsh is joining by to tell us what are the details and what are the key highlights from that particular note. Over to you, Harsh.
Thanks, Anisha. Spot on there. When we look at what the latest greed and fear note, the March 10th note by Chris Wood says, it says that inflation has come back in a big way. Of course, we know all about that. In fact, US inflation numbers came in at 7.9% for the month of February versus 7.5 only in January. And what Chris Wood and what Jefferies believes is that central banks will take more time to deal with this inflation problem if the war remains and or if the war accentuates in any way. Of course, that will worsen as central banks will find it more challenging. When we move on, the other thing that Jefferies is saying is that in the ESG space especially, things have peaked. We did see ESG having a lot of tailwind over the last couple of years, and that boom apparently has peaked in Q4 of FY21 as per Jefferies. And what they are saying is that currently the war is highlighting and accentuating the dependence on Russian energy that Europe has at the moment. And in fact, when we look at how the nuclear power wind down is happening in Germany as well as across Europe, well, they are holding back on that nuclear power wind down. And when the fundamental question of ESG does come up, we do talk about how the costs are going up with regard to ESG. And what top investors are saying, the likes of the BlackRock CEO, Larry Fink, Warren Buffett, Terry Smith, all are saying the same thing. They are saying that they will stay invested and won't divest from fossil fuels at the moment. That seems to be the case. Moving quickly on to defense, well, defense spending is currently in focus given the war. And when we see how US defense companies have gained 15% gain in US defense since the 24th of February. So that will continue to remain in focus as per Jefferies. And lastly, Jefferies has spoken about forex reserves. The US has used the dollar more from a weaponized perspective, and that means that a lot of countries have large chunks of their forex reserves in US dollars, which will fall out of favor. So as per Jefferies, the last part of this prediction seems to be suggesting that the US dollar will fall out of favor soon, and that has already peaked, is what they are suggesting.
We leave it at that, Harsh. Thanks for highlighting the takeaways from the latest greed and fear note.